Now, we talk about treasuries. We did talk about you're more in the mid to shorter end of the curve. Let's talk about the long end of the curve. You know, I feel like TLT, which is the 20-year bond ETF, is for people who like to overthink things. I feel like it's like, oh, the numbers are going to say this, the Fed will have to do this, and you're doing 3D chess, and it has incinerated money over 4 years. It's down 38%. Why isn't it doing what all of this money thinks it should do?
Listen, I'm not a big fan of the back end of the yield curve. I think at the end of the day, think about what we get in yields in Europe. Like, why wouldn't I just take that? I'm at the front end, ECB's got to cut rates, or I can be a thrill seeker in the long end of the yield curve and hope ultimately rates come down. I think the curve's going to steepen, so I like buying the front of the belly. There's going to be a point in time where TLT, you know, the last couple of days, I bought some long end. You know, there's tactical things around month end, quarter end. So, you know, there are times to be in the long end. There's going to be a point where, gosh, we're going to want to own some duration. TLT allows you to supercharge that duration. But I think it's, you know, I don't think it's the soup of the day today, but I think there's going to be a point in time that it's, by the way, it's more efficient than a lot of blended indices. Like, if I want duration, that thing is a beautiful vehicle to get there. I just don't think we need it today.
Well, to that point, I'm taking a look at the fixed income outlook that you released today. You write that basically duration is no longer the reliable hedge that it once was. So with that in mind, I mean, Eric says that it's for people who like to overthink things, but do you think that people are still buying the back end in hopes that it will act for a hedge? I just don't understand what the calculus is.
I mean, there is some, by the way, if you think geopolitical comes back, owning some long duration can be helpful. I think listen, at some point, when inflation comes down, owning that back, it'll make some sense. Today, the correlation with equities, so, you know, markets move on themes. Today, the theme is, what is inflation going to be? Are tariffs going to be a problem? Is it a one-time price adjustment? If what's going to happen is the back end of the curve will correlate with the equity market. Today, I'd rather buy equities. Equities generate 19% ROE. So you think about, if my book value of my equities going up 19%, I compound that over 2 years, or I buy the long bond under 5% with inflation running, we can debate where that is. Like, I'll take the equity, particularly growth equity, all day, and then marry that to income.
So just to really, we only have like 30 seconds left, so this isn't fair, but just to make sure I'm understanding, you'd rather buy equities than long duration bonds?
Yes.
Okay.
Yes.
All right.